Hey, good morning, everybody. Today is Tuesday, September 22nd, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Markets started strong yesterday, but turned sour after biotechs were hit with significant selling mid-session. Both the NASDAQ and the S&P 500 closed higher, but sharply off their session highs. Trading volume was below average. Advancing issues bettered decliners by about 3-2 yesterday. While not looking healthy, the New York Stock Exchange advanced decline line is looking a bit more bullish, having put in a higher low and a higher high since the August 24th market low. New lows continued to better new highs. Small capitalization stocks outperformed large yesterday and continue to outperform on a 10-day moving average basis. This is behavior more typical of a bull market. Our market momentum models are indicating recent market momentum is to the upside. Our swing timing model is indicating a neutral condition in the market. Our market timing signal on the NASDAQ is currently on our most aggressive indicator, a margin signal. What this means is most traders can begin to carefully work back toward fully invested while liquidating any contra ETFs on market weakness. Our most aggressive traders can begin to selectively utilize margin to leverage their portfolios. It should be noted, however, that while the NASDAQ has gone to a margin signal, the S&P 500 remains on a primary sell signal with a secondary aggressive buy. Our most conservative traders may want to wait for the S&P to confirm the NASDAQ. The O'Neill timing model is indicating an uptrend under pressure. Since O'Neill confirmed the current rally on September 8th, the S&P 500 has had 3 distribution days, while the NASDAQ has had only 2. A distribution day is a trading session when one of the major market indexes closes lower on heavier trading volume than the prior session. Too many distribution days in a short period, particularly in the beginning of an uptrend, can be an indication that the market's in trouble. I think a note of caution is in order here. While the NASDAQ is on our most aggressive buy signal, with major averages having fallen so far below their 200-day moving averages, it's likely that this market will retest recent lows. Be careful with any entries and keep your stops in place. This market could continue to be prone to whipsaws. Again, our primary market timing signal is a buy. Our secondary indication is a margin signal on the NASDAQ, but these signals have not been confirmed by the S&P 500. Be careful. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength is in the market on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market was in the past week. In the past 5 days, factory automation equipment has been up 23.5%, but that's primarily due to a buyout in the industry. Other consumer products up 1.5%. Renewable energy up 7.6%. Precious metal mining up 6.9% in the past 5 days. And rounding out the top 5, office supplies were up 5.3%. See what the NASDAQ Composite's up to. We seem to be having some technical difficulties with the charts, but yesterday the NASDAQ Composite was up 1.73 points to close at 48.28. Trading volume yesterday was just a bit above average, but well below the prior day. For you followers of William O'Neill, we are on an uptrend under pressure. We have 2 distribution days since confirmation of the uptrend on September 8th. Right now, the NASDAQ is bracketed by support down here in the 4292 area and resistance up here in the 4900 area. We are currently on a margin signal on the NASDAQ, which indicates that very aggressive traders can utilize margin to leverage up their portfolios, but more conservative traders may want to just begin to work back toward fully invested here. Let's see what the S&P 500 is up to. The S&P 500 yesterday closed up 8.94 points at 1966.97. Trading volume was below average and well below the prior day. The S&P is indicating an uptrend under pressure with 3 distribution days since confirmation of the uptrend on September 8th. The S&P is bracketed by support down here in the 1867 area and resistance up here in the 1993 range. Right now the S&P 500 is on a sell signal with a secondary signal of aggressive buy. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.